and welcome. As you may know, my name is Olivia Nunes. I'm the Manager of Childcare Policy and Funding Development for the region of Peel. Thank you so much for coming today. I can't believe it's already December, almost mid-December. And I know this is a busy time of year for many folks for many reasons. And now, year end, the holiday season, etc. So we appreciate your time with us today. Um, we just want to do a couple things before we get started. First, I do want to acknowledge the incredible work that you've done and that you continue to do to support the children and families in Peel. Thank you so much for, the work with your families, the children, and the staff in your centers that really make the experience of the child so special all year round. And the other thing that I wanted to acknowledge is that, 2025 was a year of significant transition for the sector. We definitely collectively have learned a lot. We have gone through a couple bumps together, and we've had a couple of good wins as well. And I really hope that we're going to be bringing this 2025, transition year experience into 2026 as we're heading into 2026. So without further ado, let's get into our teleconference for today. So today we're really going to be focusing on the 2026 CWELCC guidelines. And we know the guidelines are, there's quite a few pages. Now, I just want to preface that the guidelines include examples and formatting requirements. So although the document might look long, it's not as deep or thick of a read as you might think just based on the pages. There's lots of formatting, lots of spacing, and also lots of examples to really demonstrate, some of the policy components. So we're going to going through those guidelines and the resources we sent will ensure that you're kind of well prepared and compliant with all the components of the guidelines. So we do encourage you, into next week, into the early weeks of January, to work through all of those documents and requirements. So if you have any questions after you review the guidelines, please, as usual, do not hesitate to reach out to your early year specialist. Today's call, we're going to focus on some key updates, some key next steps, and some of the allocation elements as well in terms of what you can expect to see or changes that are going to be made in 2026. And the only other kind of reminder is that, we're not going through every single element of the guideline today. So this is more like a high level, reminder for everyone. So it's not meant to replace, reading the guideline. Okay. So that the funding guideline is your primary point of reference. Okay. So now we're going to just do some housekeeping items and then we're going to jump into our agenda. So, so just again, a reminder for anyone that might be new on the call, we use the Microsoft Teams Q&A feature. You should be able to see it at the top there. There's like a Q&A button. And then once you click on that button, then you can see on the side there, you'll see it says ask a question. And there you can enter whatever question that you'd like. If somebody else asked a question in the chat that you also had, there's like an upvote feature, like a thumbs up or like yes. That also helps us to say, oh, like, look, there's a lot of people with this question. Maybe we need to, issue a Q&A specifically, or it helps us to know, is this a system-wide or a very popular question, or is this kind of maybe a one-person question that the EYS can support you with? So that's just about using the Q&A feature. Then a little bit more in terms of some of our housekeeping. As you might have seen go across your screen, this teleconference is being recorded. It will be shared along with the presentation. Microphones are going to be muted unless you're called upon to ask a question. So during the Q&A component, you can use the Q&A section. Like I said, you can put up your hand and then we will go through hands and questions and do a good balance of, verbal questions through the raise your hand feature or Q&As through the Q&A feature. Okay, so now let's move into today's agenda. Okay, so like I had said earlier, so today's agenda is really meant to provide an update on the 2026 key CWELCC program and focusing on some key guideline changes and funding updates. We're going to provide an update on how we're going to roll things out to you as well in terms of when we're going to make some of the allocation changes throughout the year. There will be some coming in April. We're also going to talk about specifically, what do you need to know for January 1? And the main thing is the workforce compensation funding and the changes related to workforce compensation funding. We're going to get into that. And then we're going to talk about the necessary next steps, and then we're going to have the Q&A period. And lastly, your feedback is very valuable to us. So there is going to be a very brief, couple question, less than a minute survey at the end, just to kind of help us assess, where, what topics we might need to dig into more starting in 2026, and where we were clear and where we might need to be a bit more clear kind of moving forward. So we'd appreciate if folks could take a few minutes at the end of the teleconference to complete this survey. It'll help us improve future teleconferences. Okay, so let's dive in. Okay, so the guidelines that you received yesterday are effective January 1st to December 31st of 2026. In about middle of this November, we did receive the guidelines from the Ministry of Education. We are still reviewing those, all of the documents in detail, but today, again, we're talking about the key things, because this time last year, there were some surprises in those guidelines. So we just wanted to make sure that we highlighted all the critical changes to you as soon as possible. So let's talk about firstly what you received. So yesterday in your inboxes, you have received an email with a lot of attachments. So we just want to walk you through what those multiple attachments were and highlight what we sent you and why we sent it to you. So first of all, we sent you the guidelines for center-based guidelines for CWELCC, and for those of you who also provide services to 6 to 12-year-olds, you also received your school-age funding guidelines. In addition, you also received your 2026 Service Provider Handbook. So those are your three of the key documents that were sent out to you yesterday. In addition, we also kind of sent some tools to help support your implementation into 2026. So we sent the staff wages planning tool, which we're going to do a demo of later today. There's also a tool to help you with your workforce funding or your WIF reporting tool. We also sent the sort of 2025 CWELCC operating budget tool. That tool is going to be revised. The budget tool will be revised in Q1, but just so you have something to start the year with, we just reshared the 2025 version with you. Also, there were a bunch of memos that we attached. Now, all of these memos, these 4 memos listed here, I'll go into them in detail, but they're all part of an appendix in your guideline. But we attached it as a separate document in the email to make it easier for you to essentially copy and paste them, modify them with your organization's, letterhead, whatever you do. And that way it's easier instead of trying to copy and paste it from a PDF guideline. You can just have the Word document and you can make those changes. So I know it might seem like a little daunting, but the reason why we sent these separately as Word documents is really to help you out as an organization to make the communication requirements easier for you to implement. So I'll go through the 4 that you see on the slide today. So the first one is the memo to families regarding fees, just similar to last year. The second one is a memo to staff who are going to be impacted again by that change that was implemented last year related to GOF and the order of operations that it is calculated. So those would go to your staff that existed in 2024 who received GOF funding. Also, if required, there's also a memo to new staff because they maybe don't get GOF funding, so they're not impacted by that change. So we've also created a memo to brand new staff that just talks about all of the elements that they should be aware of. And then lastly, so for the memos to staff, there's two. There's letting them know about the planning time and professional learning time. And then the letting them know about, okay, these are the wage caps and all the ceilings that for 2026. So staff know what they're entitled to receive there. So a few of these, as you can see by the slide, it says share by, right? Those are the dates that you're required to send out the communication to your families. They're noted there, they're noted in the guideline, they're noted in the memo and the email that went out. The last one is kind of share as needed, right? Like for the new staff that you might be having, if they want to know about, okay, well, what are these new wage caps? What am I entitled to receive under this program? You can send out that memo as you feel, as it's fit, as depending on your particular organization's kind of staffing circumstance. Okie dokie. So now we're going to get into some key updates. So there's nothing significant, right, for 2026 this year. No significant policy changes are in the guideline. The CWELCC fee will not change for 2026. We're holding at the $22 a day. Some of you might be lower than the $22 a day because when you had the reduction of the 52.75%, that brought you below your $22 a day. But essentially, no change. Whatever your fee is today, or ensuring that it is the correct fee you are charging, that is the fee you should be charging in 2026. So no change to that. There have been updated program allocation benchmarks, which we will get into. The wage enhancement grant ceiling has also been updated like it is every year. And the workforce compensation funding floor and ceiling, right? 2026 was the last year of the commitment that was originally communicated by the province and the federal governments. So the increase for 2026, that's the change, and we'll talk to you about that. The other change is, so funding allocations are at a site level or at a licensing level. So in 2026, you cannot move money between sites. In 2025, there was an exception and you can, but in 2026, you cannot. You need to budget at a site level. I'm just going to pause there. That appeals obviously to our multi-site providers, but I just want to make that clear that that is a change for 2026. Okay, so now let's talk about some other key updates. So we're going to be sharing more information with you about these two changes in Q1 of January, but we wanted to flag them to you. So as we anticipated, the vacancy allowance in 2026 has moved from 10% to 5%. Right? These have not been implemented in your allocation. They will be implemented in Q1. The other key component, their key update that's going to change is that the 2025 legacy and growth top-ups become what EDU in their guidelines call the rolling top-up. So we have another slide about this, but these two topics will be explored in more detail in Q1 for you. And these two changes are not part of your January allocation. Your January allocation, as we will get into again in a few slides, is essentially like a rollover or status quo allocation. Okay, so let's talk a little bit just to remind folks about the fees. Okay, so again, there's no change. Your fees must continue to be the lesser of, like I said, $22 a day, or your CWELCC reduced fee that you were charging in December of 2024. That is, there's a few providers or a few programs where that number was less than 2022. It doesn't impact everybody, but there's definitely a few across Peel, so we just want to highlight that. The majority of the sector is at that $22 a day. Also, if you joined CWELCC after December 31st, so January 1st, again, you must set your fees at $22 a day for infant, toddler, preschool, family age group, $22 a day for full day kindergarten programs. So let's say your PA day programs, if you have a full day JKSK PA day program, it must be $22 a day. And if you're also joining us after or as of January 1st, it is $13.35 a day for kindergarten programs as well. This includes AM, PM, AM, and PM, otherwise known as before, after, or before and after school programming. These only apply if you are newly licensed in 2025. So January 1st, 2025 and afterward, or if you open or planning to open it in 2026, this has been approved through our expansion application, these fees here would apply to you. Okay, and I'm just pausing there. Okay, next slide. So that was a little bit about fees. Now we're going to talk a little bit about funding. So you would have already seen, I believe that your GovGrants announcement was made live on December 8th, right? So you would have already seen your January or your 2026 allocation. So essentially, there's no change to your current allocation, including any legacy or growth top-up amounts. If you were eligible to receive them in 2025, you would have received the same amount in 2026. The only change that was made is that if you added new spaces or if you were a new site or program that opened up in 2025, we updated your allocation to ensure that it reflected a 12-month period, right? So as an example, maybe you opened up in September, so you got a 4-month allocation. We would change that to reflect the 12-month allocation. That is the only main change that was done for 2026 in January. In April, though, we are going to make some updates to your allocation. We are going to increase your allocations based on the benchmarks. And we are going to review 2020. We're also going to be looking at our data. So making sure that any license capacity changes, significant changes to your 2025 operating capacity, as well as the change in base revenue offset used, like that vacancy allowance, we are going to be reducing it to 5%. Those are the changes that we're going to make in time for your April 1st payment. And I just also want to clarify that when benchmarks increase in 2026, that doesn't mean that legacy goes down. I know that was a question that was asked before, but that is not the case. Your benchmark goes up and your legacy or your growth your top-ups remain the same. So in short, January is a rollover of your current funding. In April, you're going to see some of these updates. And please keep reporting your data through either OCCMS or GovGrants update tasks, because this data, we do review it, we validate it, we work with you on it, and that helps us keep all of our allocations up to date. Okay, let's talk about what those benchmark increases were. So I would say overall across the board, benchmarks went up by about 2%. So 2%, let's say inflation, cost of living. There were additional increases, and you'll see that we said on slide A. So once you get the presentation, you can go through each of because the increases vary by age group and by benchmark itself, but this slide provides a good summary. So for your program staffing, depending on the age group, but overall program staffing percentages increased from last year by about 5.9 to 9.6%. Supervisors, they also went up by 8.9%. It's your accommodations and your operations. Those went up by, as you can see from the slide, between 1.8 to 2.1, but on average it was about 2%. And you can see that the increases to the benchmarks related to staffing are quite high. And those increases are based on the additional workforce funding or the increases to the ceilings and the workforce compensation funding, like the additional dollar that we're going to talk about, but they're being funded through these benchmarks. Okay. And now lastly, let's talk a little bit about the rolling top up. So we are going to talk about this in quite in detail in Q1, but we want to give the sector a little bit of an initial understanding about what this process might look like and what does the rolling top up actually mean. So the province requires that 2025 legacy and growth top-ups be converted in what they've named the rolling top-up in 2026. In order to calculate this top-up, we need to use your actuals, so your 2025 actual expenses. Once we've reported those in and once they've been calculated and reconciled within the team, then that rolling top up, like those actuals are then used to calculate your rolling top up ratio. And that's the ratio that will become permanent. So as benchmarks maybe increase year over year, that ratio stays consistent. So that's why it's your permanent ratio, right? So every year it'll be consistent once it's been determined in next year. So in Q1, we're going to talk about, like, give you more details about exactly how the rolling top up is going to be calculated. We're going to walk you through examples of the calculation, and then we're going to walk you through sort of how we're going to implement it and some of the key timelines on that. And the other piece too that we want to highlight, we've highlighted this before, but we want to reiterate it again. So it is your reconciled 2025 actual CWELCC expenses. If they are less than your total allocation, your rolling top-up amount will be less than your legacy top-up amount. So the intent behind this transition from legacy is, so legacy essentially was built on 1 year's worth of data. This ensures that there are 2 years worth of data, right? Where that your legacy costs are going to be established on. So that is sort of one of the main things. So the key takeaways are that to calculate the rolling top up, we're using your 2025 actual expenses. And those expenses will be that we're going to use are going to be the ones that we, go through the reconciliation process with you. And then that amount will then be used to calculate your permanent ratio. So we will talk in Q1 about how we go about calculating that ratio, but those are kind of the 3 key points of the slide just to be for you to be aware of. There are details in section 2.2 of the guideline if you want to read up on that as well. And we will be, like I said, having a more detailed presentation on this in Q1. So with that, I'm going to pass it along to Debbie Berjou, who's an advisor on the team, and she's going to talk about the workforce compensation funding.
Thank you so much, Olivia. And so as Olivia mentioned, my name is Debbie Berjou, and I'm an advisor with the Childcare Policy and Funding Development team. And so today I'm going to talk you through the workforce compensation funding for 2026. And so, as Olivia mentioned, there are no major policy changes for 2026, and this includes the wage enhancement grant and workforce compensation funding for 2026. And so while there are no major policy changes, there are some important updates related to the wage caps and the wage floors that you do need to be aware of. And so in terms of these amounts, so WAG will continue to be funded at $2 an hour. It's been $2 since it was implemented. However, the maximum eligibility ceiling did increase by $1 for 2026. And so that ceiling is now $33.81. Very similarly, the WCF also increased. And so, in 2025, staff were eligible for up to $3. So in 2026, just an additional dollar that's been added to the workforce compensation funding. And so that amount goes up to $4 in 2026. And very similarly, the ceiling, as you can see on the slide, also increased by $1 each for RECE program staff and RECE supervisors. Not to break the trend here, but the WCF floor also increased by $1. And it is now 25.86 for REC program staff and 26.86 for supervisors. And so what does this mean? It means that, if after all of the grants that have been applied to base wages, eligible staff cannot earn less than the wage floor. So they do need to be brought up. And so that's really great news to see all of those caps increase and the wage floor increase as well. So now that we've sort of covered the wage caps and the wage floor, Alicia, let's go to the next slide, please. Let's review the steps that you need to do to determine the wage grants for 2026. So you'll recall that at the start of this year, so as of January 1st, 2025, the ministry told us that we must apply the GOFs, the general operating funding, into base wages before applying any of the other wage enhancements such as WAG and WCF. So this was a change for 2025. And as you know, GOF includes the SWB amount, so the staff wages and benefits amount, historical, and pay equity. So I want to confirm that that rule continues for 2026. So in 2026, you still need to apply GOF first before you apply the other wage grants. So in order to calculate what staff must earn in 2026, first you do need to take their base wage, and this is the employer base wage that were paid as of December 31st, 2025. And this will include any wage improvements provided by the employer, such as obligations through collective agreements or cost of living increases, as well as minimum wage increases that occurred in 2025. Once you have that base wage amount, the next step, as I mentioned, is to apply the GOF. And GOF, cannot be the hourly amount that you apply here cannot be less than what the staff received in 2024. So you do have to use your 2024 distribution plan in order to determine the hourly amount for the staff. If your program didn't exist in 2024 or if you didn't receive GOF, you can skip this step. Once you've done that, the next step is to apply the WAG. And so as I mentioned, WAG is $2 an hour. And the new wage ceiling for 2026 is $33.81. So staff can qualify for up to $2 an hour, depending on where they're at. Once that's done, you then need to apply the WCF. And so, as I mentioned, the wage increase for 2026 is $4 an hour. And so staff are entitled to this wage increase if they earn below the ceiling, so up to that ceiling. And then lastly, the last step is to apply the wage floor. And so if after you've applied GOF, WAG, and WCF, the staff hourly amount is below the wage floor for 2026. That means they must earn the amount to bring them up at a minimum to that wage floor. So you must bring staff up, program staff up to the $25.86, and supervisors up to the $26.86. And so Salma will take you through some examples later on in the presentation, and she'll walk you through the tools so she can demonstrate this for you. But before I pass it on to her, I did want to review a few reminders for WCF. So, as I mentioned, the wage cap and floors have been updated, and the order of operations continues for 2026. I also shared that the workforce compensation amount increases by $1 to the total of $4 an hour for 2026. What's really important here is that some staff may not receive this additional dollar because of the change in GOF order of operations that was implemented in 2025. And so even though EDU made this change, they did require that no staff should receive less hourly wages than they did in 2024. And so, you're familiar with this. This has been the rule in 2025, and this rule will continue in 2026. So once you calculate the staff wages in 2026 with grants, if it's less than the 2024 amount, you still need to bring staff up to that amount that they earned at December 31st, 2024. And so whether or not staff receives the additional $1 an hour in WCF will really depend on what their base wage is and how much general operating funding they're receiving. And so, as I mentioned, the wage stability policy really ensures that at a minimum, staff should continue to receive the wages that they received in 2024. They should not receive anything less than that. So, for example, if, in 2024 at December, staff was earning a total of $28.50 an hour with all of the wage grants applied. And when you use the tool in 2026, if the amount comes up to $28 an hour with all of the wage grants, you would need to hold that staff at their 2024 wages. So they'll get that extra 50 cents. And so, I know this may be a lot, but again, it's not a change for 2026. But to help you do this, we strongly recommend that you use the staff wage planning tool to help you calculate the correct wages for staff. It'll do all of the math for you, right? And it'll help you determine exactly what staff should be receiving. You should have received that tool as part of the package that you received yesterday, along with the CWELCC center-based guidelines. And then finally, the last bullet on the slide here really just talks about the pay stub notation requirements. It does remain the same for 2025. And so that means, in pay stubs, you will need to break out the CWELCC WCF amount, the general operating funding amount separately, as well as the WAG amount separately. And so if you do need help with these calculations, you're always welcome to reach out to your EYS and use the tool as well. And I believe there might be a question in the chat. Let's see here for a second. Oh, I don't see anything. Okay, so I'll now hand it over to Salma to walk you through the example, and she'll show you how it all comes together using the tool. And once she's finished that, we have some time to do some questions and answers. Thank you, everyone.
Thanks, Debbie. So hi everyone, my name is Salma and I'm a senior program funding analyst at the region of Peel. And today I'm going to be walking you through the 2026 workforce compensation planning tool. So once again, the purpose of this tool is to help providers determine the appropriate hourly wage for their staff. And once again, please note if you are an existing provider, you would have seen this tool in the prior year. And as Debbie mentioned, there have been no major changes made, with the exception of updating the wage floor and ceiling to align with 2026 numbers. So let's get started. The first tab we have on screen here is the instructions tab for your reference. So on this tab, you'll find details on the type of staff who qualify for WCF, an overview of each column you'll be seeing on the next tab, and brief instructions on what to input into each column. So please ensure to thoroughly read through this tab before moving on to the next tab. The next tab is the planning tool itself. So similar to many of our other templates, you are required to provide inputs in all green cells. The white cells will be automatically calculated for you. So we're going to walk through two examples today. The first one, we're going to assume that we have staff member SD. And this staff serves CWELCC eligible children, and it is an RECE program staff. Next, we're going to assume that staff SD, their estimated program hours worked for the period of January 1st to December 31st, 2026 is 1,500 hours. Column H is asking you to input what your staff was earning in hourly wage as of December 31st, 2024, including all grants and enhancements. Please do not include any top-up amounts. So let's assume staff member SD was earning $25.86 per hour, which includes all their grants and enhancements. Column I is then asking you to input what your staff was earning in hourly wage as of December 31st, 2025, before applying any grants or enhancements. So in this case, we're going to assume the minimum wage of $17.60. Next, if the staff was entitled to any pay equity, please enter in the hourly pay equity. In this example, we're assuming 0. And finally, you will enter the amount of GOF, SWB, and hourly historical funding if applicable. And in this case, we're going to assume $2 an hour. So as you can see, we're now done with all the green provider inputs. As we move along the tool, you will notice that WEG is automatically calculated in column N, with each staff being eligible for up to $2 an hour if they are below the WEG cap of $33.81. Because the staff member is below the WEG cap, they are going to receive the full $2 per hour in WEG, which again is automatically calculated for you. So this brings her subtotal of base wage plus pay equity plus GOF plus any historical funding and WEG to $21.60. Now, as Debbie mentioned, the wage increase for 2026 is up to $4 an hour for each eligible staff member. Because staff SD is currently earning less than the wage ceiling of $28 an hour for REC program staff, they will be entitled to the full $4 of wage increase, bringing them to a subtotal of $25.60. After the wage increase is applied, the staff member is still earning below the wage floor of $25.86 an hour for an RECE program staff. Therefore, in column R, wage floor rate, they will receive an additional 26 cents to bring them up to the wage floor of $25.86. So this staff member's hourly wage in 2026 is $25.86. And if you remember earlier, if we scroll back to column H, we noted that the staff member was earning $25.86 as of December 31st, 2024, after all their grants and enhancements were applied. Column T calculates wage stability. So it'll calculate the difference between the 2024 hourly wage of $25.86 and the projected 2026 hourly wage of $25.86. Because the 2026 hourly wage is the same as the 2024, there's no additional wage stability required. Column U will calculate each staff member's final hourly wage, should be in 2026, and it's simply taking the higher of column H, which is again the 2024 wage with enhancements, and column S, which is the 2026 rate with enhancements. And in column V, we have included the staffing cost projection, should you want to anticipate your staffing cost, excluding the benefit portion for the year. And lastly, we have included a pay stub reporting section within columns X, Y, and Z to help facilitate an easier reporting with the pay stub notations of WEG, GOF, and CWELCC. Next, we're going to be looking at another example where wage stability comes into play. So here we're going to assume we have staff member AB. And once again, this staff member serves CWELCC eligible children, and they are an RECE program staff. We're once again going to assume that the staff member's estimated program hours worked is going to be 1,500 hours from January 1st to December 31st, 2026. Next, the staff's hourly wage as of December 31st, 2024, we are going to assume that staff member AB was earning $28.50 per hour, which once again includes all of their grants and enhancements. In column I, we're going to enter in the base wage per hour as of December 31st, 2025. And here we're going to assume that they were earning $22.50 before applying any grants or enhancements. Once again, if a staff member is subject to hourly pay equity, please enter it in column J. In this case, we are going to assume 0. And for the GOF, SWB, and historical allocation for staff member AB, we're going to assume $3. So as you can see here, the staff member is still below the WEG cap of $33.81. So the $2 an hour in WEG is automatically calculated in column N. So they will receive the $2 per hour in WEG, bringing their subtotal in column O to $27.50. Now, once again, the 2026 wage increase is up to $4 an hour for each eligible staff member. Because the staff member is currently earning less than the wage ceiling of $28, they are entitled to 50 cents in wage increase to bring them up to a subtotal of $28. After the wage increase is applied, Staff member AB is earning the wage floor of $28 an hour for an REC program staff, so therefore they will not receive any amounts in column R for wage floor. Now, as you can see here, AB's hourly wage in 2026 is $28 an hour. And if you remember earlier, we noted that in 2024, staff member AB was earning $28.50 after all their grants and enhancements were applied. Column T will therefore calculate a wage stability amount, which is the difference between the 2024 hourly wage of $28.50 and the projected 2026 hourly wage of $28. Because the 2026 hourly wage is lower than the 2024, an additional 50 cents will be added in wage stability in order to bring the staff member back up to the hourly wage as of December 31st, 2024. And that concludes my walkthrough. I will hand it back over to Debbie.
Hi, everyone. My name is Mark York, and I'm an advisor in the Child Care Policy and Funding Development team, and I'll be walking you through the rest of the presentation. So we do recognize that there's a lot of information to digest, and we want to ensure that everyone's understanding about their actions required under their funding, which is why we are hosting another teleconference in January, as Olivia mentioned. So you should receive an invitation in your inbox shortly. All right. So before we jump into our Q&A session, let me just run through some next steps. So your 2026 funding allocation should be visible in GovGrants now, so please have a look. We really encourage you to stay on top of your operating budget throughout the year and make sure that you have your continuous and regular check-ins with your EYS. And also don't forget about the updated 2026 staff wages tool. It's there to help you calculate staff wages with all the new 2026 WEG and WCF floor and ceiling updates. Most of these resources and tools should have already hit your inbox, and if you haven't received them as of yet, feel free to reach out to your EYS and they should be able to sort everything out for you. In addition to that, we are working with our digital team to get everything posted on our website so that you can have easy access to all of the resources and tools. Other reminder, there's an update task in GovGrants that's due back mid-January. And in January to early February, you'll be expected to complete the workforce update task in GovGrants. Lastly, our next teleconference is scheduled in January 2026. And as always, if you have any questions before then, please email us at our earlier system inbox. All right, if we move on to our next slide.